All right, hey traders, TG Watkins here. It is October 23rd when I'm recording this, and man, what a day, right? So if you guys kind of saw what was happening out there, the market just was melting down all day long. And usually what I look for is the daily 21 as support, and it was looking a little touch and go there for a while because you can see here the market actually went below the daily 21. It's like, oh boy, this is pretty bad. But finally, at the end of the day, the market finally bounced, and yeah, so we ended up above the daily 21. So that's kind of what I was expecting, but trying to figure out exactly where this thing was going to turn was pretty challenging, and it just kind of did it on a dime. So in through here, you could see we had quick right there was basically where we finally got the 8 and 21 on the 2-minute to cross. And we could see it was getting a little bit frothy to the downside because, here was a down, down. It kept kind of hitting the 2-minute 50 as it went down. And then finally in this last little bit right here, you could just see like it just really pushed, really kind of just went over that edge and then finally snapped back the other direction. And then we got a nice little move up to just about 5,800 into the close. Pretty good. And from another technical level, it was right here into the 15-minute 21. Now, I didn't think that today was going to be such a big day. You can never quite know what's going to be happening out there. But from a bigger perspective, we've been seeing this kind of starting to set up. So the Moxie group and I was talking to them this week, and I said, hey, don't be surprised if the market's going to kind of stay in a range, maybe pull back a little bit. It just seems like it's a little overdone right now. And part of that was here. We could see on the daily chart price was just a little bit too far. And then coming into the week, we could see that basically or I think it was last week, that the market just couldn't get any higher. So if it couldn't go any higher right here, I was like, okay, then expect it to go sideways to down. And then we had, I showed you that video yesterday or the day before where we had a nice little fake out right here on the 15-minute time frame. We had a pretty big short squeeze going into the end of the day on Tuesday, I believe. And yeah, that was a fake out because you could see it came up here, and then today we opened with a gap down, and then they just sold it off all day long. That was just really, really big, and you're just kind of sitting here thinking, okay, when are they going to turn this thing around? And so we were kind of looking for that. The thing to note about this and using the Moxie indicator, I'll show you two things. Actually, three things. One of them with the Moxie indicator is here. You can see that going from Tuesday into today, Wednesday, that the Moxie indicators were still below zero even though price was over the 15-minute 50. That's what I call an inverse trampoline move. So price should not be over the 50 if the Moxie indicator is below zero. Then the other thing I could show you is today is when we got the Moxie indicator below zero on the hourly chart. So talk about timing. That was really pretty good. And if we zoom out a bit, we can actually see that there has been growing negative divergence. So higher high, higher high, higher high, but lower high, lower high, lower high. And so we've been seeing these kind of waves happen. So if I actually zoom out on this, and this is real key, and this is what's important about the Moxie indicator, and this is what I was telling the Moxie subscribers about, if something to watch for is like, look at that. That area on the Moxie indicator was not looking that great, and so I said, hey, we should be expecting some more downside, sideways movement, something like that. Like don't be thinking swing long right here. Now we're in defensive mode. And what you could see what the Moxie indicator was trying to tell you is every time we reached a new high, we were doing out less and less and less energy. Okay, so that was a really important thing to see. And that's why I'm kind of wondering if this might be a little bit prolonged. Okay, we have the election coming up. This might be where traders, investors, and hedge funds, and all the big people, they might actually start taking some chips off the table. Okay, so maybe we're 2 weeks out from the election, it's heating up, and this might be like, all right, we're good. We're just going to pull back from here and not really deal with too much, and we're just going to let things settle in from here and wait till after the election. It's a guess of mine, but it's something that I'm thinking about. And the other way that we can look at this is if we look at the breadth indicator. So if we look at here, so we can see that we've had higher highs for the S&P, but notice that we've had fewer stocks staying over their 20-day SMA. Okay, so we're seeing some negative divergence with the 20-day SMA breadth. And then on the 50-day, it was mostly fine. We saw higher highs there, but now we're seeing a negative divergence right here. So lower high on the number of stocks over their 50-day SMA. So yes, there are fewer stocks going up on this last move than before. Okay, so we are starting to see some weakness. We're starting to see some negative divergence, and I think that we should be watching for these things to start cycling down. I don't know how far. I don't know how much liquidity and room that the market needs to make, but basically what I'm seeing is expect choppiness, expect, yeah, there could be some up moves, like tomorrow could be pretty crazy to the upside because today was such a big move to the downside, but overall I think we should be a little bit more reserved about our expectations over the next few weeks, mostly because of the election, and then also just because I think the technicals are also lining up with what we are seeing with potential election jitters. Okay, so hopefully that sits with you guys well, and we'll just kind of let the market settle down for a little bit. We actually cashed in a couple trades. So Reddit, we took some profits after being up 36%. And then Cart, which is Instacart, we also took some profits. We actually got in here twice. So we took profits, we're up 23%. And then we also had here another one that was up almost 9%. So we took profits on that one too. And yeah, we'll just kind of see what the market wants to do after that. And then we have some dry powder ready to go for whenever the market starts to right itself again. All right, guys, thanks again, and we'll see you at the next one.
Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.